When we're looking at the Indian market, there is a huge development. From last 5 years, we are seeing 50% of increase in the Indian market.
But what's interesting, America is up 20%, the EU is growing at just 2.2%, albeit from a very high base.
The whole aim is to close the trade finance gap and provide the SME financing. Maybe it is around maybe 5% in many of the countries.
I'm Deepen Patel, editor at Trade Treasury Payments. Today we're in Lisboa at the FCI 58th annual meeting. I'm with no other than the Deputy Secretary General Betul Kurtulus, who is here to discuss some of the key findings in between the sessions. Betul, thank you for your time.
Thank you, Deepesh, joining us in Lisbon. Thank you.
Thank you, and we're delighted to be media partners. So, Betul, you opened up this morning. What are one or two of the key highlights that you want to take away from your delegates attending Lisboa this week?
Yeah, thank you, Deepesh. I would highlight two key messages from this morning, from my presentation and also the discussions and the other presenters. First one is receivable finance is becoming more and more important product for the trade finance world. It is a very resilient product, and it is also supporting the liquidity solutions for the companies. And the second one, we are talking about the growth of the product, but also I prefer to mention that growth is coming from collaboration and growth is coming from the emerging countries. So this is the fact that the emerging countries' share in the international trade is increasing.
Yeah.
So we need to invest more on the infrastructure of the countries that they are really taking more and more share in the world trade. And as an FCI, our responsibility is support where our members are and also the countries newly coming in this area of the trade finance.
So, Betul, according to the annual review which you launched, the industry has just passed the 4 trillion euro mark in terms of the total factoring volume. But what's interesting, America is up 20%, the EU is growing at just 2.2%, albeit from a very high base. But would you say there is a shift in the center of gravity for where factoring is happening most?
Deepesh, I would prefer to say the industry is expanding rather than shifting. Of course, Europe is the biggest market, but now the growth is coming from the different regions. First, the US. US share is really increasing in the global trade finance and also the factoring industry. Asia is always the engine of this business. It's taking like plus to 21%. But I want to mention the diversified trade direction and their increasing role in the global trade finance, especially on the factoring. There are some countries that are really increasing their turnover from last year to this year, especially the emerging countries of the Europe. The increase in those countries like Hungary, Serbia, even in Ukraine, we are seeing a plus 20% increase. And also when we are going into the Asia, of course, the big players are creating a very good turnover. But for when we are looking at the Indian market, there is a huge development. From last 5 years, we are seeing 50% of increase in the Indian market.
Yep.
Some other small markets are also, like Indonesia, are coming behind India. So there are small countries within the region. Africa, for example, maybe the absolute amount is small, but the increasing in each country is very, very high. We see 75% increase in Egyptian market. So those are really good developments that it is showing us. This is the growth is coming from very diversified regions.
Betul, so picture this 2023. I remember Marrakesh, I'm sure you do too.
Of course.
UNIDROIT launched the model law on factoring. Today, UNIDROIT and FCI launched the Guide to Enactment, and we spoke to Secretary General of UNIDROIT, Ignacio Tirado, and Marek Dubovic at the FCI Legal Committee this morning. Why has this Guide to Enactment been launched today, Betul?
It is because it is very important for our industry. First of all, model law of factoring, it is firstly organized for the countries where they don't have the factoring law, or they have factoring law but they need to increase the establishment or increase the visibility or the level of the factoring in some countries. The enactment also, there are some since 2023 till today, there are lots of developments in the legal side. So enactment also showing some guidance for the countries where they also need to enlarge their factoring operations, even in the definition of factoring. In some of the countries where they are very developed factoring law, but they need this kind of enactment support from the UNIDROIT to develop their from definition to implementation. So thank you for UNIDROIT for coming to Lisbon and joining us. Again, we are together in annual meeting for supporting our industry.
Well, another important partnership is the partnership with the multilateral development banks. And it's fantastic that IFC, part of the World Bank Group, Afreximbank and EBRD are here today. What does FCI need from those partnerships that those multilaterals can't achieve by themselves?
It is so broad. First of all, today in the morning we announced lots of joint projects with the multilateral development banks. It is from the broader sense, we are now entering in the joint study on the global mapping of the receivable finance infrastructure. FCI already in 2023 announced a legal study. It was covering 92 countries where our members are. But now we are revisiting this study. IFC is the leader of the project, but we are together with all the multilateral development banks. The aim is to including the emerging countries, especially the emerging countries where we have no data before.
Yep.
And the whole idea behind this study is to having the global mapping of the infrastructure of the receivable finance world. I hope that in the future we will also include the payable finance side also. And WTO is also one of the supporters of this study. But of course, multilateral development banks, they are having lots of support in our industry. So from the FI level until this very broad study level, we are collaborating with each and every of them, with sometimes in a same country, but sometimes in every region separate activities.
Yep.
And our aim is to increase our collaboration with each and every of multilateral.
Okay. Now, let's hone in on one market. I'm going to suggest we start with India because we probably don't have time to cover all of them. And as per my panel session, which was on the relevance of the Indian factoring market, the growth. Can you talk through some of the high-level initiatives, the growth of the Indian factoring market, systems like the TREDS invoice registry? What are the priorities for FCI as well to engage with India? Because there are a lot of Indian members here today.
Yeah, here we have a session. You're going to moderate this session. It's a breakout session specifically for the Indian market. India for us is kind of a booming market. Because, and also from the presentation of myself this morning, by the 2050, India is going to be one of the largest economy in the world. And the infrastructure in the country is also really supportive, and the export is increasing. So it's a very, very good market to really expand the factoring operations. There are, of course, some difficulties for understanding or regulatory support. The regulators are also need some regulatory support for the infrastructure. One good thing is the country is very digitalized on every meaning. This is the good part. But as an FCI, we very recently published a kind of a white paper for understanding of the payment under approval system of FCI. And it is good to maybe announce that we're going to organize a seminar in the second half of the year together with you, Dipesh, I hope, to support financial institutions and also for the corporates, because the corporate side's understanding, especially the supplier onboarding, is also one of the difficulties that when we are launching this business factoring side or the
Yeah.
supply chain finance side. So there are lots of things to do in India, and we will do one by one.
Yeah, absolutely. And of course, we're delighted to have your support in our joint publication towards the end of last year on
Yes.
a guide to supply chain finance, and also working closely with IFC, EBRD, ADB on legal case studies, which we'll be delighted to be working with you to feature. Now, the theme of this conference is designing the future of receivables finance, which is a very difficult question to ask in a world of extreme geopolitical tensions, conflict, a huge change in trade and supply chains, many changes in the law, of course, innovation and tech at such a huge scale. We've seen the advancement of AI like no other before. What does the future of receivables finance look like in the next 5 years, Betul?
This next 5-year kind of questions is very difficult to answer. But Dipesh, what I see, especially from the FCI perspective, so we have partners, and like your ones, and we have members, and also we have multilateral development banks, and we have ICC. We have ICC trade register. There are lots of developments happening in this market. So we will design the future all together, because digitalization is not easy, and how we digitalize our business is much more difficult question. But what I'm seeing, it's not going to be alone. So we will be together, all together. So what you are doing in some regions, what we are doing, what the others are doing, we need to come together and design our future. The whole aim is to close the trade finance gap and provide the SME financing. Maybe it is around maybe 5% in many of the countries. If we can manage to increase it in 5 years' time, 10 to 15%, then it is going to be valuable for the countries and the country developments, maybe for the employment also. But it's going to be together, not alone.
Positive outcome amidst the backdrop of some difficult challenges ahead for the factoring and trade finance industry. That was Betul Kurtulus, Deputy Secretary General at FCI, here in Lisboa at the FCI 58th annual meeting. Betul, thank you very much.
Thank you, Dipesh, for joining us. Thank you.